Welcome to Leaders in Lending. I'm your host, Jeff Keltner. This week, we wanted to dive into a topic that we get asked about quite a bit, which is exactly how Upstart works with lenders. I don't want to make this an ad, but we really get a lot of questions about how the details work, how it differs from loan purchase programs. And so we wanted to bring one of our customers on, and while we talk about sometimes Upstart lending partnerships a little bit on the show, we wanted to deep dive in that topic specifically today. So I'm very happy to be featuring my conversation with Gordon Levy from Applebank. Applebank has been a customer of ours for a while, and he really dives into both why they decided to move into the categories of lending we're working with them on, how that process, both decision-making, diligence, implementation went, and the results they've seen so far. So for those who are interested in what a partnership with Upstart and a bank or credit union looks like, I think this is a great conversation that will really give you a lot more detail. And I promise we won't do this often, but I thought it was worthwhile so people can understand that context. So without further ado, please enjoy this conversation with Gordon Levy. Thanks for taking the time to join us, Gordon. Welcome to the podcast.
Thank you, Jeff. My pleasure to be here.
It's you're in the office in New York. I've been in that office, but it's nice to see people back in person in offices again.
Yeah, we've been back since the middle of last year, and most of our people now come in 2 or 3 days a week, and it's worked out well. And we've also adopted our work from home practices and our digital practices. And quite frankly, that surprised us. That went better than we had originally expected. And we now have a nice blend of, in office, working comfortably as well as working at home in a productive way in our view.
Well, I look forward to joining you back in your office at some point in the not too distant future.
We look forward to that as well.
I wanted to really dive today into the partnership between Applebank and Upstart. And just kind of go through the history of how that happened and how it's working. But before we dive into that specifically, would love for you to just give a little bit of background on the bank for the audience.
Sure. So Applebank has been doing business in the New York City and surrounding county area since 1863. I knew, Jeff, you were going to ask me that question, so I calculated earlier how many years that is. It's 159 years. And as I said, we've been serving the communities of New York City and the surrounding counties. Obviously, when you're in business that long, you have ups and downs, and you have exciting periods and periods which are more routine or mundane. But we're at a point now where we are just about completing our digital transformation. And although we've been in business 159 years, many of them we did very well. We are very much looking forward to the next 3 to 5 years with the completion of our digital transformation. And a big part of that, of course, is Upstart on the consumer lending side. So we're in a very good position. We obviously compete each and every day with the biggest banks in the world, quite literally.
Right in your backyard.
We're eager to continue the fight, if you will. So
I love it. You guys, that means you got a big birthday coming up next year. 160.
That's right. 160. Yes, absolutely.
Turn a digit. So let's talk a little about, obviously the primary relationship with Upstart kind of focuses on unsecured lending. Was that a business you were in prior to the relationship? Not kind of why was that important to you as an area of possible investment?
Yeah, so I've been with the bank now about 4.5 years. In those 4.5 years, we did not have a unsecured consumer lending product. My understanding is that many years ago we did, but it is something that we just did not have experience in. There was demand from our customers. We wanted to get into the space for the benefit of our customers primarily, and we began speaking to third parties such as Upstart. We spoke to several of them, and we ended up working with Upstart because of the quality in our view of not only underwriting model and other capabilities, but truly the quality of the people. The sales process we felt was very productive. The right level of engagement, the right tone, no pushing. The sales team was very, very patient with us. And throughout the process of deciding which vendor we would use, we became very comfortable with Upstart and Upstart's people, quite frankly.
I'll have to pass that review along to our sales management team.
Yes.
I did want to ask you, when you thought about, so you see demand from consumers, I think given how rapidly unsecured lending has grown and how much that's been dominated by fintech lenders, that's not surprising to me that you would hear that in tune with the customers. It's something they want. How did you think about, going to third parties or partnerships versus like building something on an existing LOS or kind of building something in-house? How did you decide to go down the partnership route? And did you look at the in-house, and what was that kind of decision criteria?
Yeah, for us, for Applebank, we do not do a lot of in-house software development.
Mm-hmm.
So we knew almost from deciding that we would want to offer such a product that we would need a third party. So for us, it's a fairly easy decision. Go straight to a third party, see what they could bring us. Hopefully, we would find someone that we would be able to work with. And if not, potentially consider the investment and the work that would be necessary to start doing significant software development. Luckily for us, we didn't need to go that route, and we decided obviously on a very effective fintech.
Yeah, we appreciate that description. So
Sure.
when you were looking at possible partners or routes to market for this, I'm curious, you talked about the quality of the sales experience and the people. Were there technology considerations? Were there kind of key criteria that you were looking at that you thought these are the things we really need? I love the idea of the right partner in terms of the people in the process, but from the product and technology and experience, were there things you said, hey, this is what we've really got to have and how we're evaluating, what we want to offer to our customers?
I mean, for us, the first thing was it must be a sensational user experience for our customers, right? That was number one. There were certainly other aspects such as, underwriting capabilities and credit models and things like that, which we were interested in. But the first thing we looked at was what will be the customer experience. We want to deliver a product that really is able to satisfy all of our customer needs. And we felt that the Upstart customer experience could do that. We, of course, wanted, as I said, to manage risk correctly, make sure that we were not taking on too much, finding the right balance, the approach that Upstart took and sort of the capabilities, as I said, that Upstart brings allowed us to get comfortable there. And of course, the integration, right? Would our teams integrate well? More so than the technology, but would our people be able to work together? And our view was on all of those fronts, it would be a good fit for us.
I love it. Now, I want to ask you something a little different, which is like, what was the internal, I always find that when I talk to financial institutions, there's the business team that says, hey, this is a good partner, we want to do it. And then there's a whole bunch of other stakeholders in credit and risk and compliance that are, have input into any potential partnership decisions. What was that side of the process like? Were there any, and in particular for others who might be listening, lessons learned? Because I feel like this is a process that every bank is trying to figure out how to optimize, really the overall review. So how was that? Were there any difficult points or more challenging elements, and any lessons learned on what that process looked like for getting the whole partnership approved across all the various internal stakeholders?
Yeah, so luckily at Applebank, we operate in a very cross-functional way. We are good partners across all three lines of defense, whether it's the product teams, compliance, legal, risk management, FCC, as you mentioned, the second line of defense, if you will, and even our internal audit team, our third line of defense. All were involved, all were aware of what we were trying to accomplish. Certainly marshaling the teams or the people that are within all of those groups took some time to coordinate, and we needed to work with your team, some of whom reside 3 hours away from us in California, as far away as it could possibly be in the continental United States. So I suppose there were challenges there, but it was really a matter of having a strong project management team to make sure everyone understood what timelines were, what the milestones were, where documents were, where we could share, feedback and thoughts. So that was important. There was a lot of coordination within the bank to get everyone sort of speaking with the right people at Upstart, thinking about the right, decision points, and really coming together to say what's necessary for us to make a decision. And I have to tell you, all along the way, the feeling from just about everyone was, we should get this done. This is a really good company. We need to work with them. However, we need to do certain things to make sure we are dotting the I's and crossing the T's, which we ultimately did. I think for us, the biggest challenge, we started this work in late 2019. Of course, we ran into the pandemic in early 2020, and that caused us to pause, as you would expect, for about 6 months. So for us, that was the biggest challenge. overcoming the pandemic, making sure that sort of the credit
Hmm.
environment would still be positive to launch a new product, and
Hmm.
then regrouping and revisiting what we had accomplished, and then continuing the dialogue with Upstart, which is what we did.
I remember a meeting in your boardroom where we talked about barring any major geopolitical events or disruptions.
Right.
I think we ran into one in the middle
Yeah.
of that.
Right.
Um, so I do want to ask, like, what was the from? Hey, this makes sense. I mean, obviously, you took a little pause. You came back as things kind of had settled in the pandemic. And I think we'll talk a little bit about performance later. I just kind of want to follow the flow of the conversation through. What was the from the hey, this really makes sense. We decided to do it to the hey, we're going live. What was that implementation, technical integration? Talk to me through like what the investments are and how that kind of looked for you.
Yeah, so same as during due diligence, once we signed the agreement, we needed to make sure all of the stakeholders, all of the cross functional stakeholders were
Hmm.
at the table as we built the product with your team. Right? We needed to make sure that everyone was comfortable with disclosures and sort of, customer screening and truly the economics and the loss rates and things like that. So same thing really, getting the people together all on the same page, organizing meetings, getting documents in the hands of the right people, and then coming together and talking about, okay, what else do we need to be able to move forward? This case, instead of the decision to sign an agreement was replaced with the decision to launch a product. But I
Flip
must,
switch, yeah.
yeah, but I must say the sales team that was fantastic. They were the implementation and build team was even better.
Yeah,
I
I
mean, it
agree
was
with that. They're
yeah.
definitely bad. And don't tell my sales team. I guess this is recorded, so
No,
I'm just
no,
going to.
this is
They're
going to
pretty good.
go be online. So we have to watch out here. I want to be careful. The sales team was excellent. The implementation team was also excellent, and we felt we built a very good product.
And then I just want to highlight one thing I think that you said that I think is so critical in my experience and these things being successful, which is bringing the cross-functional stakeholders to the table early in the process. I feel like the partners I've talked to that have struggle with these projects tend to like view their risk partner as like, hey, when it's all said and done, I'm going to like put it in front of you for a 24-hour review, and that just doesn't work.
I can tell you that would never work here. It would nothing would ever be approved, and it's not the approach we took. We started early, and as you said, you came and visited with us, and
Mhm.
who'd you meet with? But our model risk management team, if I remember correctly, and others who are deep in sort of the operations of the bank, and that's just the way we do business, and that's the way I would recommend any bank, think about a partnership such as this one.
Yeah, it's certainly what I've seen be successful for the banks that I've worked with and credit unions and partnerships. Just to lay it out so the audience is really clear, you had talked about using this for your customers. What is the experience the partnership provides? I know, are you using it for customers? What does that look like to your customers? Are you using it for new customer acquisition? Just talk me through the kind of nuts and bolts of what the actual product offering looks like and who it's working with.
Yeah, first and foremost, we wanted to, as I said, to provide a unsecured consumer lending solution for our customers. So we have actually
Hmm.
marketed via posters and flyers and other information on within our 81 branches across downstate New York.
Hmm.
And we've trained our branch staff on the product and how to speak to customers about it. But we've also, put information on on the bank's website. We've
Hmm.
also done a little bit of digital marketing on our own to try and acquire new customers in downstate
Hmm.
New York. So it's really been a combination of let's try and cater and communicate to existing customers, but let's, as you say, try and make this a way to acquire new customers. So we've tried both. We've been successful in certain areas. We need to do a little bit more in others, but by and large, it's given us a vehicle to communicate more with existing customers and a vehicle to try and acquire new customers.
Interesting. And so this is like, I mean, I know so many fintech partnerships are fintech branded, or I see people compare what we do with our partners to loan sales, but this is really a very different thing for you. This is an offering you're providing in your existing branches to your customers and really serving their needs, first and foremost for the existing customer base you have in and about the New York area. And secondly, is the kind of net new customer acquisition.
That's exactly right. And we advertise this as personal loans by Applebank, powered by Upstart. So we view it as a truly a partnership internally, but when we go to market, we make it clear that this is a loan from Applebank, and the customer will receive the Applebank care and customer service that many of them are aware of. I said we could compete with the biggest banks in the world, and we do. However, we've been in some of these markets for 159 years, providing reliable service at reasonable price, and people have come to expect that, and they know us, and this is a nice way to continue the relationship and the delivery.
Is there anything, this wasn't on my questions list to you in advance, so I apologize, but is there anything you've learned in the kind of training branch employees going to market? I mean, one of the things I always see from financial institutions is this is a kind of a new kind of product and a kind of a new muscle for how I talk about, reach out to, engage my customers. Any lessons you've learned or things you've kind of noticed from that experience and really kind of going to market with a pretty different product than what the bank had traditionally been offering to your customers?
Yeah, so quite frankly, what we've learned is there is truly not only demand from the supply and demand economics, concept. There's a need for this type of product in the communities that we serve. There's a profound need, and I think the pandemic probably even made that need more profound. And we are very pleased to be able to be in our markets providing this service, at, in my opinion, a perfect time for our customers and for the bank, quite frankly.
Yeah, sometimes it's interesting. I know all institutions get a little nervous when times are tough, but it's also in many ways the times when our customers most need the availability of funds and lending products when things are a little more challenging. So it's always, I think, very rewarding to be there in those moments to support those customers through their journey.
Yeah, I mean, as you know, after each loan is originated, a customer gets a survey, and some customers fill out the survey, and I read all the comments, and there's a lot of them that say, nobody gave me a chance. I had this problem or that problem, but Applebank and Upstart did, right? And I won't let you down. I've read several of those, and that is a rewarding feeling, and that means a lot to us. Certainly, there's economic reasons why we entered into this product as a bank and as a business, but being able to really help the people of our community, and we see that from the responses, is very rewarding, Jeff.
We actually keep reviews from borrowers. We go through them every week with the whole company because I think it keeps you grounded in why we're in the business and why we're trying to do what we're trying to do is that review. I think the comment no one else would take a chance on me is really interesting. And I know that probably stems from the kind of different approach we take together in terms of underwriting and the use of AI to kind of better understand credit risk, which I think helps us broaden the pool of who we can find that's credit worthy and offer loans to. Talk to me a little bit about how important that is to the program and how you got internally as an institution comfortable with a different approach to analyzing and assessing risk, because that's, I know, can be difficult for conservative organizations to get to a place where they're comfortable with that. But so talk me a little bit through like how that's worked for you and how the institution got comfortable with that approach.
Yeah, I mean, first and foremost, as a regulated entity, we have a responsibility to be prudent with our balance sheet and customer deposits. We take that extremely seriously. We are obviously not in the business of making loans that aren't managed from a risk perspective correctly, aren't reckless, right? We are a prudent institution that takes sort of the commitment to the balance sheet very seriously. However, the Upstart model and working with Upstart has allowed us to understand that there are ways that a non-traditional borrower or a borrower with a non-traditional credit profile can still receive a loan, right? We do loans from $3,000 to $50,000. So if someone has a background where there was a blemish a few years ago, or there's something that happened and is explainable, we could still make a loan in the lower amounts at a reasonable price. And sort of the dynamic nature of the Upstart model and the Upstart methodology allows us to do that without being reckless. And in our view, we have opened up, the ability to receive a loan to people who elsewhere, because they are using, tools and techniques that don't have that dynamic element, such as the Upstart model does, it allows us to do business with borrowers that others can't. And our customers know that and recognize that. And like I said, they appreciate it. And believe me, I keep an eye on every loan, but I certainly keep an eye on the loans where, hey, this
Yeah.
FICO score is a little bit lower than you some borrowers might want. And there's not a lot of them. But by and large, the majority of those loans are performing. They are
Mm.
current. And the borrower who told us, hey, I'm not going to let you down. You gave me a chance. I'm going to take this seriously. By and large, that is that commitment from the customer we are seeing fulfilled.
And I think that's not just a commitment on the loan, but I'm going to bet that turns into a loyalty to the institution that took the chance over time, that I hope we see play out. But it's great to hear that the loans are performing as expected. Certainly, we have a lot of data to show that. But it's always interesting to me that institutions tend to view historical loans on other people's books, underwritten with similar approaches, as differently than things on their own. And so it's always nice when you go from the theory of, I know there's a bunch of data here, to a portfolio that's performing and customers that are paying. And I know that feels quite different.
Yeah.
So I also want to talk about your kind of efforts at net new customer acquisition. So, serving the current customer base, kind of the core of where you were coming from. How have you leveraged the partnership to reach out to net new customers and maybe expand the customer footprint of the bank?
Yeah, so as I said, we're doing marketing in many different places, many types of physical marketing and posters and flyers in branch and close to branches. We are trying to make consumers, quite frankly, in the neighborhoods and cities and towns that we serve, that we are in this business. If they are in need of a loan, they should come meet with us, because we do believe the product is unique and the product can help serve their needs without question. And we're trying to get that message to our customers, but also to consumers for the most part within the communities that we serve. Yeah, our approach has always been to manage this, or enter the space in a prudent fashion, be diligent, be methodical, make sure before we take on more, we're seeing the results. I mean, there's only we can only do a certain amount about the macroeconomic environment, but we believe today, even with all of the headwinds that 2022 is presenting, that it's still prudent to be in this business. But we are continuing to be prudent and methodical and managing carefully. You mentioned artificial intelligence, right? That's sort of a new space for the bank and for a lot of people.
So what do you see on the horizon? What's next? You've said very nice things, but I'm curious, where do you see this going, or what are other areas of investment you're looking forward to?
So we recently signed an SOW with a statement of work with Upstart to launch later this year an auto refinance product. So we're certainly looking forward to that. Another sort of fresh product that we don't have a lot of experience in within the bank, and we've been very clear when we were speaking with your sales team. We said the experience that we have within the bank relative to auto refinance is we know how to drive cars, right? And that's about it. But we want to learn, and we want a partner who will teach us and help us make good decisions. Now, we're going to take training, and we have already. We've read every document, and there were thousands that you sent over. We've learned on our own and independently. We've spoken to others in the business. So we're in a much better place today in terms of knowledge and the ability to be able to manage a product like this. But it was the same experience of, okay, it's new, we get it, but let's learn together. Let's find a good partner. We have. And then we're looking, by the end of the year, we'd like to, decide upon what the next product is in the consumer space for 2023. I don't know what the answer is yet. I'm listening to, a lot of different thoughts and ideas, but we are open, for business.
Yeah, we certainly excited to be going to market with you guys, not only in the personal loan space, but in the auto refi space. I think, to me, they're very similar products in that they're very different products, because lien perfection is a very different thing than you have in unsecured. Yeah. But the idea that they were small, difficult to underwrite, difficult to make profitable because of traditional approaches that involve manual review, but can be made effective for consumers and lenders through digital technologies, more sophisticated underwriting, automated processes. I think they're both in that world of like, we would like to do them more, but we just can't make them profitable without these capabilities. And those capabilities are here now. So they're very similar in that way.
Yeah, absolutely.
All right. Anything else you want to share? Anything I missed about your journey, good or bad?
It's really been, and sometimes I will get criticized for, hey, you've been, Stockholm syndrome and you've been bedazzled by all these great charts. And, I don't think I have. I think I'm as objective today as I was, when I worked in compliance or audit or risk management at large companies. I'm skeptical. I'm professionally skeptical. But this for the bank, for Applebank, has been a good partnership, and we are very pleased with the results thus far. I have to be clear, this is month 14. Unsecured consumer could go bad very, very quickly. We saw that during the recession, right? So I'm very careful not to call the product a success within the bank because I don't have enough data to do that. But we are very pleased with what's occurred so far, encouraged by the early results, and we believe the trend is very, very positive. What I don't need any more time to tell you is our customers, as I said, are by and large very pleased with the product. Those who use it come away pleased. They feel like it's a fair price. They get good service. We fill the need, and they are happy with the relationship, and we are happy that they are happy.
I like it. That's probably a pretty good place to end. Everybody's happy. I like happy.
Yeah, me too. Yes.
Gordon, I do have three traditional questions I ask at the end of the podcast. I don't think we sent these over to you, but I'd love to ask you because they're kind of the things I ask everybody. And they're pretty straightforward, but they are, one, what's the best piece of career advice you've ever gotten?
Yeah, I guess wow, I wasn't ready for this one, but the best career advice I ever got is probably don't quit. Don't ever quit. And keep. You'll obstacles will be in your way. They'll emerge from unsuspected places, such as a pandemic, right? I had heard about sort of the Spanish flu and sort of read about sort of middle age, plagues and pandemics. I never expected one to get in the way of a pretty big product launch, but it did. But I didn't quit. I don't think we quit as a bank. I know Upstart didn't quit, and that was great career advice.
Persistence is brilliance sometimes.
Yeah.
I like it. What's the best piece of advice you've gotten about the consumer banking space? You've had a decent career here.
Yeah, I think there are a lot. And this is not a criticism of regulation. In fact, I think regulation and having people look at what you're doing and sort of opining and saying, yeah, that's favorable. You should continue to do that. I think that's a positive thing. But the career advice I got was it's one of the most regulated industries in the world. Between banking and airlines in the U.S., I don't think there's any industries that are regulated more. And that requires a level of rigor that probably doesn't exist in other industries, and be prepared for that was the advice I received. And I think that's right. But I have to tell you, it keeps us on our toes, rightfully so. And ultimately, for the most part, it benefits our customers. And I have zero. In fact, I encourage it.
That was some advice we got when we headed into the financial services space. And we always kind of viewed it as if you can do the hard things well, then that's a pretty good advantage in the marketplace. And then my last question is typically one bold prediction for the future, but I feel like you gave me one a few minutes ago with 5 years until AI is the kind of have-to-have feature in lending. Do you want to stick with that, or any other bold predictions you want to make?
Yeah, I think that's probably for the benefit of this discussion, the boldest prediction I can make
it's one I use, so I appreciate it. But I don't think everybody sees it that way. But it's certainly, I would tend to agree that it's it's a technology whose benefits are clear, and it's going to be it's kind of figure out how to make it work or be eaten by those who do.
That's right. And so I don't want to be any bolder than that. I could only get in trouble by doing so.
I
So
said that part, not you. So
yeah,
I don't want you to get in any trouble.
okay,
I'll get in trouble.
very
Well,
good.
Gordon, I appreciate you making the time today. This was a great conversation, and I appreciate you walking us through your journey and kind of personal lending and in partnership with Upstart.
Thank you, Jeff. Pleasure to be here.